here. This is a new show of Bitcoin Live. I am here with Costas and Marcos. We are just coming back from the conference, from the Vegas conference. We were there for several days. We actually stayed after the conference. The last day, first of all, it's amazing, to meet people that you work online with. In
Yeah.
person. It's very, very different energy. So you guys saw maybe some of the videos we posted. We had a lot of fun. And also, for me, it was very interesting because we had dinner with some of the people that are actually using the system for a long time. And, I am relatively new to the team, etc. So it was actually, I was trying to approach them with an open mind to see, okay, what is their feedback, what they're thinking. And I was really, really, really impressed. Everybody, and these people come to the dinner and they wanted to meet us. So, um, they use the system, some of them for more than a year. And, they say that, just to summarize, if I had to summarize, the collective response was something on the order, oh, my best financial decision was to buy Bitcoin. My second best financial decision was to use this trading system. That was the level of their feedback. Was just incredible. Um, and then, we had an event. This was the last day of the conference. We talked about this event for a long time to you guys. I don't know if any of you came, and it was an opportunity to meet me, the team, but also, to hear about the power law. It's really different speaking about these ideas on a screen, on a computer, and then doing it in a room full of people. You can interact with them, they can ask questions. It was a lot of fun. And these were people that really wanted to learn, because at the same time, we had a sailors talk. They were two of the biggest talks of the conference. And Sailor was more or less at the same time I was speaking. So, and I had some people who told me I would rather come to see you than Sailor, also because, Sailor's talk is recorded, so you can actually watch it later. But we also
Yeah, so is
recorded
ours
our
though. We recorded. Yep.
right. We also recorded, and we are going to edit it soon, and we will post it, so you guys actually can look at it, enjoy it, and, ask questions and so on. I think it was a really, really nice talk. We had a very good feedback. I talked for a while. I didn't go through many charts, but it was enough to give an idea about why the power law is so important. It's this framework that makes you understand Bitcoin in a completely different way. Then the guy started to also talk about the trading system, why it's different from other things that are available. And it was very, very nice. Then we had a interaction with the people that came there. And the day after, then Costa treated us. We went to this golden steed.
The Golden
The golden
Steed.
Yes.
That's where
I
Frank
ate,
Sinatra.
yeah, I ate all these fancy restaurants for the conference, and this place was real. This was really nice. It's a fancy place, but I think where the local go, instead of a tourist, and you could see that the food was amazing. So, and Costa told us the story behind this place where Elvis went, the Rat Pack went, in the classic days of Vegas. It was fun. We had a lot of fun. We had a lot of social interactions, with the team. So it was a great success. Um, anyway, um, you guys want to add anything to that about
Hey,
the event or anything?
great time. Just don't tell
Costa?
anybody what we really did.
Yeah.
Yes, we are telling you just a
The
portion.
important
What
part.
Yeah.
happens in Vegas stays in Vegas.
Yeah.
No, it was good fun. I think the event was very special, giving you a platform and a lot of time. I think we spoke for about an hour to 2 hours. It was intimate. People got to ask you questions. It went really well. We had a good bunch of people there, so we're really, really happy about that. I'd love to see that event grow over the years. Like we kind of did it in the back room, and we'll sit in there going, in 4 or 5 years' time, I can imagine that this is, we're taking up the whole ballroom. Maybe we're filling 200-300 people because, what the most amazing thing is when people watch the video is that you actually did a pretty interesting prediction during the call. During the night, and we'll share some of those recordings. Using your math, basically, I think you came within $900 of the price at that moment, which was incredible to see. So I think the power law model and the math that you're using is going to just the truth will find its way forward, right? It'll find its way through the noise, and I can imagine that this event will just grow over time. So anyone who didn't come last year, I know the event, they're already organizing for April next year at the Venetian, I think 26, 27, 28 of April next year. So, I would start organizing yourselves to be there, come to the conference, which is fantastic, and also come to meet Giovanni personally. I think it was absolutely fantastic.
Yeah. Yeah, if possible, we are going to do it when Sailor is not speaking. But Sailor is recorded. You can see Sailor, and it was a nice speech, but
As far as I,
it's mostly about
as
cheerleading
far as I'm
and learning something
as
specific.
far as I'm concerned about content that you can actually learn from, Sailor, we'll invite him next time. He can come too. To ours.
Yeah.
Yeah, he's welcome. Yeah, he probably get more out of ours.
Yeah.
Yeah.
Anyway, all right. I'm working from this laptop because I'm still at my friend. It works fine. I'm going to share my screen. By the way, guys, I decided to going to continue this lifestyle because it's a very good lifestyle, and you're going to see me losing weight if I continue to do that, because up early in the morning with Dario, I go to the gym, we do lifting and walking, and then I go to the sauna
Right.
and jacuzzi. So it's nice lifestyle.
Beautiful.
Yeah.
Dario's life.
Yeah.
Yeah. But I feel good. I did this for 3 or 4 days in a row. I start to lose weight and feel more energy. So it's going to be great.
All
I'm
right.
going to stick with it. Anyway, so this is one of the chart I wanted to show you. There is the usual power law. I created. You can access Patreon. I can show you the address. Where to find them. But the middle line is the usual power law. Then I draw a support line that is usually 60 relatively to the support line. Right now, the price it's just and has been fluctuating like that, right? It has been going above the power law and stay there for a few days, the power law, but basically we are basically floating and power law. That is one of the problems, right? That again, I will not say we are not going to see a bull. We are moving. I don't have them with me, but if you listen to the episode of physics of Bitcoin that I did yesterday with Steven, he used this other very interesting method called log periodic power law. I want to do an indicator with that, but it's very intense mathematically, computationally. We don't have yet a way of doing that, but he calculated running it for many, 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 iterations, the kind of projected trajectory from here to almost all the end of a year, to the level of details where you can see actually each major oscillation of the price from here to December. So it will be really cool to see if we follow. You can see that it matched those few oscillations of the price, but we will have to see if a projection, but if a projection is correct, it was projecting 178 by the end of the year. It is close to the other method we use where we are thinking about 200K, but around that price. So it's supposed to move away and start to go there, right? It's just interesting that we are in June, so we don't have much time left over, and we are still around the power law. Now the other, this purple here is the address, so it's basically a model of a price based on addresses that catches everything else, right? But addresses, maybe this is one of the things that it shows here that you have to be careful because there are ETFs, there are give exposure to Bitcoin, but not necessarily directly to the address. Because here we see the address starts to be a little bit flat just recently, but they could in general. So everything agrees that these three model, one based on direct relationship between price and time, that is the red one. The yellow one is hash rate. So we take the relationship between hash rate and the price, and then we make a model and we calculate. What is interesting about the yellow line, they're actually following almost to a dot. It's so precise that it's very difficult to think it's just by chance, but it's following to a dot the line. The addresses are deviating from it a little bit. We're still pretty but waiting for a major activity, right? The pace from Bitcoin starts to pick up and is mostly, the winning rate goes high, and we start to see a real boost, right? Because there's nothing to worry about. We are still floating around, but it doesn't feel like run, right? We maybe here when we recover from this major correction days where they're going up, and it was price seemed to be aggressive, but then once we reach the power law, this aggressiveness kind of stopped. So it seems like it's very reluctant in leaving the power law for whatever reason, and this is not typical of bull run because you can see every time we had a bull run, we have usually pretty aggressive. It's almost exponential for almost 1 year. It takes 1 year. So it starts in November, it goes all the way to the end of the year. And, we had the tariffs, we had all these other things. So, it's not to say we don't have a bull run this time, but it's also kind of weird that we are kind of floating around the power law without leaving it. Well, I don't have much more than this to say. We can also look at the charts, where we can do that. Then I can give the to Marcus his chart here. Is supposed to show the relationship between global liquidity and the smooth version of that, also the green, so and the price, right? So in general, I believe that this match is still valid. It's not always one to one. Some people that show this type of chart, they kind of truncate chart up to here, where a match is much better. Seems almost one to one. If you accept that this has been like February of last year, 24. So since the February of 24, it's more like a directional thing. Suppose these two things, and they look like almost perfect, but they always do it by stretching or squeezing the chart. I will take it more like directionally. It's going to give us a precise price for for Bitcoin. But the main idea is that we were looking, like for example, when we had a discussion here in the after reaching going above 100k, and then everybody was expecting the price, right, to go up as it happened in all the different bull markets. We had this major correction, and you could have seen, because remember this chart. I think I didn't explain it in other times. It's based on a delay. So basically, we are, you see this why the green and purple future, right? Because you're taking the M2 as your liquidity measure, and we shift M2 by 85 days, and that give us a predictive tool, right? If you take it at face value, and so far, start in particular, if you start here from February of last year, you can see all the major features are actually pretty close to each other. Right? We reach a bottom here, a bottom peak here, bottom, and we are supposed. So these are recent retracement, could be explained by one of the main retracement of a purple line. Right? It's never perfectly straight. Or the fact that it's mostly directional, right? So the general direction of this liquidity is up, but it doesn't mean that in the meanwhile we don't have some local retracement, right? But if you take it seriously, the liquidity to go up, and that means we will have at least the other 3 months of going up, right? Because if we follow the general direction of a liquidity, um, and the liquidity is kind of 3 months, 85 days so ahead of us, it means that until we see a major correction in the liquidity and maybe a down supposed to go up. So these are all good things. I think this is just a necessary retracement because, as probably Marcos will show, liquidity, local liquidity chart, and is teaching about it around it, right? You need to refuel, so you have those. You can go up directly straight, right? You need to refuel to go up. But yeah, this is what I will say. Do you guys have any comment on this, or anything you want to add?
I think I just think in the short
This
term, the
analysis.
liquidity heat map really tells the story the most right now. I agree with you. I think we're going up. I just think that Marcus has been calling the pullback since we had the big move from 73k, and we can have a look now even on the daily of the 25x exactly where the market makers are hunting the liquidity. So I think that's worth just looking at, and then I can move into how the algo is taking advantage of this dip.
Yep. You ready? Let me
Okay, Marcos, do you
share
want
my
to
screen.
have a chart to share?
Yeah. All right. Let's buckle up here. See what we have. All right, Gio, you got it. Okay, so what we're looking at is the daily chart on the Bybit futures perpetuals market. Futures perpetuals are a derivative of the spot. Derivative markets is where you have high concentrations of leverage, and wherever you have high concentrations of leverage, you're going to have bubbles. Wherever you have high concentrations of bubbles, you're going to have price action and volatility, which leads to price discovery. So that's why we use the futures market. Okay, so we're just looking at your typical everyday trading view chart here, and we can see that we knew we were on this trend line, and that particular ascension could not be sustained. And just before the conference, we were looking for a break of this line or a pullback, and we got it. So now I'm going to add in the liquidity
You're
to
gonna.
get
Sorry,
the
guys. I
context.
think Giovanni, you got to align the video better because I think your big screen and Marcus's
Oh,
screen
okay.
is small.
Okay. Is it on him or me?
I think Giovanni. Can you make Marcus's chart the center? You're on mute.
You're on mute.
Can't hear Marcus.
You can hear me?
I can hear you. No, there we go. Perfect. That's perfect.
All right. Let's keep it rolling here. So let's add in the liquidity. So we're going to start off by looking at everything. And the liquidity gives us the picture behind the price action. And as we can see, we already understood that the algos were taking the short side. The short side was being liquidated, and at the same time, we have your eyes are probably drawn to that tremendous amount of concentrated liquidity there. That is definitely on the menu. And what's also interesting here is when you're liquidating one side, that's why these algorithms are very efficient in how they collectively move. You're building the liquidity for the other side, right? So I'm going to highlight that right now because I'm going to back out of the 3x. And as now you see, as we walk down to the 5x, you can see these pools, these levels are actually building, right? So as the liquidity is being liquidated on one side, it's building the liquidity to return, the return liquidity on the other side. So as they were liquidating the shorts, the return long liquidity was being created. So kind of like what you had over here. It's starting a new pool. That's how they look when they start. All right. So now just keep an eye on this. So we were looking for this pullback. This happens a lot of times. They will run up. The market will run up to a heavy concentration of liquidity and pull back violently. And it's kind of like when you swing a hammer, you have to have a backswing to swing a hammer. You can't just set a hammer on a nail and push it down. You have to swing it. So when the liquidity comes to this side, it builds up the momentum to come back stronger. So just keep that in mind.
It's another nice analogy, wasn't it? That's a beautiful one.
You need that. If you can't get a lot of momentum to hit that, you need you need actually, and it kind of probably some kind of power law, some type of physics behind it. You do need an acceleration in the opposite direction to get the momentum to break your target. So it happens almost all the time at all different levels. You have these backswings before you move. And also that particular price action just completely just draws in all types of shorts. Look right here. When the move started, you had a ton of new shorts coming in following that move, and they're just going to get harvested right here. All right, so let's keep backing down. Let's back down to the 25x, which that's what Costa was speaking on earlier. I like to look at the highest leverage on the particular screen or the time frame that I'm looking at, because the high leverage goes first. If you think about it, 25x is two and a half times more dense than 10, and so on and so forth. So this is closer to the price, and it's also a lot bigger in leverage. So look at what this high leverage liquidity actually builds. It builds these perfect levels. You don't need to build support and resistance lines. This is the real support and resistance line. So we took out these three levels here. 1, 2, 3. And you probably wonder, well, why didn't we just keep going? There was no new liquidity at 25x to go after. Yes, there's 10 up here and 5, but you don't have that very lucrative 25. It wasn't there. So the market, what does it do? The market checks up its move, and that checking pattern creates, just like a casino, you got bets on the short side and bets on the long side start to build up so it can have the liquidity that it needs to move. It's just like a casino. That's why that action just does that. It builds in new liquidity. But here's kind of what I was saying earlier. As it takes out the short side, at the same time it builds the long side. So the long side liquidity is being constructed and being generated as the short side is being liquidated. So now that gives them the return liquidity that they need, right? So now we have these levels coming back. And here's another tail sign. We didn't keep going up because there was no liquidity up here to come after. So we stopped. And then the market goes into this consolidation pattern, which creates bets, long and short on each side. And here's the next tail. This is a very important one. You can see that they have stopped harvesting shorts, and they have clearly, this is the market collectively. It's not like some one institution. It's just a school of large sharks feeding the same way in the same pattern. So they all use similar programs. So now we can see that we are now taking out the long side. The question is now we know we're taking the long. We broke this traditional like technical pattern here, that support line. So the question is, we're harvesting this particular pool, which goes down to 100K. So we know we got that level, and then there's another one down here at 90, starts at about 93 and ends at about 90. So the reason the price won't go straight there is because there is no bridge. There's no bridge here to take it there. So now you're going to have a checking pattern, which will create the bridge liquidity that's needed. Here's an example of that. You can see that the price over here did not go straight up. There was too much of a gap there. So it created it. So what it did is it consolidated and created what I call internal liquidity, or liquidity that's going to bridge it to that level. So when it created the internal liquidity that it needed to fuel that move into the next level, and it did it at the last level. There's a big gap here. So what does it do? It checks, creates the bridge that it needs, and then it goes like almost like an electric circuit that it has to have a conduit. So right here, there's a big gap there. It's not going to go straight down for it. So what is it probably going to do? The probability is going to check, create the necessary bridge that it needs to narrow that gap before it goes lower. So we probably check up for a few days, maybe even bounce, but we'll probably hang out here to build it. You can also kind of see it right there, starting to build in. The question is, how much do we retrace? Do we take out this one? If we take out this pool here, we would be about half, 50% of the move from the bottom to the top, which could definitely be in play. You can also go back to a prior time. We don't necessarily take all of it. Like when we made the big move up right here, we left a nice chunk of liquidity here, and it's still there now. So we don't have to necessarily take out everything, which would put us coming down here to the lowest level. But this one is probably, the price action is going to tell us as it checks and builds that bridge in. If they get close and do not touch this, then that's a good sign that it might be reversing. So we'll find that out when we get down here.
There's an argument though for this, that because we're in a bull run and the clock is ticking, figuratively and literally. We've got the Bitcoin clock ticking. So
Yeah.
is there an argument that there is going to be more of a rush to take out that top liquidity before we slow? If we go now we take out the 98, which looks like it's done and dusted, but to build up liquidity, get back into the low 90s, right? Then we're going to have to range. Then we're going to have to take out. It seems like could throw off. Like it looks like that will be too slow, and Giovanni maybe can intercede here. But it's also looking like to me that if we actually have a look, that Giovanni's indicators show us that the support level of around 70K in a year from now, that some of these liquidity pools can be building up to get taken out on the way down. We can see all the way down to 70K, the liquidity pools there, and then they end. So the story here could also be that we're developing the future pools to be taken out in the bear market, and then maybe that we stop at this 198, and then we take out that top liquidity before slowing things down too much. I don't know. That's the way I'm kind of looking at it, but maybe I'm full of hopium at the moment.
My guesstimation is they've already terminated this one, so that one's pretty much done.
Gone.
There's a little bit more, but that's pretty much done. So what that leaves now is this one, right? So the big question is how this one's going to play out, right? If they build in the bridge, they'll need a few days to do that, a day or two to build in the bridge, and they come for this, then we'll know. This one's definitely in play. But to your point, the power law is very powerful. So what my guesstimation is, they'll probably end somewhere between these two pools, and then build in the necessary bottom and start, get back on track, because time is of the essence, right? So let's put the other pool, the liquidity back.
See,
So
when you see that, it's just like your eye just draws up, though, right? It doesn't look
yeah,
like there's much
here,
gas at this
here's
point.
what I would say is almost as high a probability as you would want to look for. They are not going to go into a bear market, right? Because to get into a bear market, we have to break these levels here. We have to come all the way and start breaking back into this old area here that we left. The market clearly left this liquidity behind. So we'd have to come all the way back in here and take all this out and break this structure. So I don't see that. And you got to ask yourself, the market is a very strong taskmaster, right? Are they going to let all of these fresh shorts make all that money and just keep going? Let all these guys just make
No, no way.
no, they're
There's
not
just
gonna
no
do
way.
that. No, it's
There's
gonna
no
be,
way.
the market is a wrecking ball. So it's going to, these guys are fried chicken. They're dead. So, and these guys shouldn't be relaxing too much either. So the market is very good at fooling us, right? It makes us start to doubt ourselves, and then boom, it just comes up with a fury. And so this is high probability zone here to be taken. Now we don't know. We can't guarantee much beyond that, because we are on the third leg of the bull run, right? This is leg
And,
3. So
yeah.
that might be the end of it. It could be.
So to line up with Giovanni's, and sorry to jump in again. So
Yeah, yeah.
if we're looking at a November top, right, and we've still got a move from 100 to 135, we take out all that liquidity. We're probably going to have to consolidate for around 60 to 90 days to build enough liquidity to then get to the next leg, let's say up to 180, 200. So really, that leaves us with a 3-month, let's say a 40-day, 45-day move, a 60-day consolidation, another 45-day move, and that's the end, right? So we are really running out of time to go back down to a 90K or high 80s. I think the bounce might happen off 98. And then just because, I don't know, Giovanni, like, what do you think? We look at the bull runs and how they move up a certain percent every day. At what point do we have to move up to really hit the targets?
Yeah, we're getting squeezed.
Yeah, I mean, if by September we are not in the 140, 150, something is weird, right? At that point, you will have to think differently, about the bull run. It doesn't mean that we have something in the last few months of the year, but by September, I would like to see the price kind of close to 150.
Yeah, June, July. So we've got 3 months. We've got 90 days. So yeah, 98, 90 maybe.
Yeah, depends on how far we go past this level, right, and start a new level. A new one to get started, something like this, and get bigger.
It'd be beautiful if you, So we went up 20% above the liquidity pool last time. So that would get us almost to 160. Is that what you're saying?
Yeah, right in here. Yeah.
That would 160. Wow. Yeah, I can see that happening. Yeah.
Yeah. Something like this, because 20%, right? 20% above would put you here. Yep, right in there.
Yeah.
And we got to do all what you say, Giovanni. We got to do it next week. Okay. We're late for our flight. We better might not be able to take that shower. Might have to go ahead and fly dirty. Gotta go. Yeah, we're late, man. We gotta get on it. Yeah. But even worst case scenario,
we cannot do without them.
anything we have to consider this a win if we just take out this liquidity and land somewhere in this 150s. That's still not the end of the world, is it?
No.
No.
I mean, hey, you know, that's pretty good. We can make that work. Yeah.
Yeah. I mean,
I think that also, though, the thing is, sorry to add, just Giovanni, a lot of those, the fear and greed aspect. So you could almost argue that we're going to get to 140, 150, 160 based on liquidity that already exists, right? So the market makers are going to send us there regardless, in
Yeah.
a way, right? That's
Right.
what we're saying here.
Just like I say,
So
Giovanni, when you gas up for your trip, this is the first gas station right there. And that's
yeah,
the second
yeah.
gas station. So
so
yeah, you're gonna yeah.
So
Yeah.
it kind of makes sense, or you could argue the point that we've got the gas to get us to 160,
Mhm.
and then there's going to be at that point the FOMO, the greed, the euphoria phase could get us that just final kick over the line from 160 up
Yeah.
to maybe 180,
That's
200, because
true.
we're not really factoring that in right here because
No.
this is based on
This,
reality, right?
right. But not bananas. Right. Bananas.
This is not bananas at all.
Right.
This is just
Right.
there. This is like a foregone conclusion. So,
Because
so
you're right. You're
yeah.
right, Costa. If it gets here, everybody and their mother and grandmother, everybody's gonna start chasing it in here. Yeah.
Yeah, so we can call the banana will get us the next leg up. And I think that consolidation period might be extremely brief because it might not even be a liquidity build. It could just be just a surge.
Because look what happens when they're liquidating, they don't play. That's the thing. Here's a perfect example. It's the same move. Look at this.
Yeah. Yeah.
There's your
Bitcoin.
backswing.
Yeah.
There's your backswing, and boom. And when they get started, it just rips. It doesn't play around. When they're taking it out, it goes fast. That was just a couple of days. A
Right.
week you moved. I don't know, 50%. So yeah, crazy.
Yeah. I think that 160, 140 to 160 doesn't factor in. We're just looking at reality. We're not factoring in the banana zone, which I think will get us the rest of the way. So
Take care of
really,
the
it
equation.
seems I think we remember bull runs and things in fast forward when in reality they happen in slow motion,
Yeah,
and that's why everyone is so impatient. But really, everything that's playing out has played out relatively healthily, and in a way that we're studying it.
yeah.
It does seem like it's on track, really.
Yeah.
It's on track. It's on track. The market does the same thing every time. It just does it differently.
Yeah, it just does
Yeah.
differently.
It's
Yeah.
just crazy. Yeah. I don't know how I
I
can
mean,
make us doubt.
look, since I started to use the trading system, my view on these things has changed completely because, in the past, if you wanted to take some little risk and with the idea that maybe if you understand the cycles, you could, sell a little bit. In fact, the long-term holders do that, right? With all the pushback and criticism that some people give me, that is what long-term holders do. They sell, I don't know if probably a portion at the top and then they rebuy at the bottom, right? That is one of the biggest opportunity for enhancing your Bitcoin without, beyond just DCAing. But if you have something like we do, you don't need that. For me, it will be okay that we continue to move along the power law for the next 10 years with some fluctuations, right? And that is enough to play all kind of, leverage games, etc., right? To continue to accumulate more and more your Bitcoins.
Right.
Actually, in a sense, I almost prefer it, right? Because if we start to go in a bull run, then we will have to fear the correction that comes after that. If we could get to move along the power law plus the usual correction, right? 10, 15, 20%, that is plenty of fuel for our algorithm, right? For our trading system.
Right.
So, in fact, talking about that, Costa, do you have some of the new trades that we were able to do in the last few days?
Yeah, I did actually, and I just want to show people why it really only makes sense to be running an algorithm in this market. And I also want to show you just a bit of research. I've done something else, but yeah, let's have a look at the screen if you can share.
Try to mute myself. Sorry, guys. Yeah, go ahead. Let me see.
Just share the screen so it grow.
You're trying to show. Okay, just a second.
Yeah, I'm sharing. You just think you just have to.
I'm going to
There we
share
go.
your.
Cool.
Yeah.
Okay, perfect. So this is really interesting to compare the two at the moment. This is a larger range, more conservative setting, and you can see how this one has the larger TP, the larger price deviations, but it's just picking up these big moves beautifully. So here's a good example of we entered at 108, and our take profit at that point was around 114. And what we've able to do is we're able to really catch these local bottoms here. Look at that one's perfect. This one here particularly good. This one here was unreal. Caught this one this morning last night, and you can see it's just really bringing down that weighted average price. Our take profit right now is 109, but our break even is all the way down at 104. So you can see how the execution on this is flawless. It's picking up all these moves down, and it's doing it in a real fearless way. That's the best part about it. So.
What time was the big drop, Costa? The big one.
Looks like it says 9 o'clock p.m., 9 p.m.
What time was it where you were?
I think I'm running this
9?
thing on a US time base, but I think it was around this morning. I saw it coming this morning.
Yeah.
Yeah, it wasn't too long ago because you can see how, hold on, you can see 21 and 12. So it was 21, it was 21, 4 hours ago. So it would have been 8 a.m., 7 a.m. for me.
Yeah, for a lot of people, they're busy doing things, getting ready for their daily activities, and you're not sitting in front of a computer.
Yeah, but look at that. You can't.
This thing
Look
is
at this.
always
That's just.
on. Yeah.
This is beautiful. It really is. So this is able to pick up those big swings, and that's what's going on there. We can also jump in and have a look, if you can see on my my higher time frame. So the higher time frame didn't pick up that little one yet, just because that deviation. It's actually waiting for a larger deviation. So if the market was to basically, because obviously the two different algos, different settings, so we're able to pick up different prices. Different take profits. You can see this one is much tighter, but if the market moves down here further, we're going to have an entry somewhere there. Of course, if we rally up, we're going to take profit here as well. So we're using the two different algos here to cover different ranges. This one here, you can see is a little bit more active on the run up. That's because of that shorter TP. So they're picking up these moves. Fantastic.
Two different same algorithm.
Correct.
Two different setups.
I wanted to just do. I don't know. Did you guys have any questions about that, or it looks pretty good? Yeah. I wanted to just take a look at. I know one of the things that. Sorry, go on.
It's the usual surgical precision that is astounding to me.
Absolutely, and I wanted to just look at some news that's been going on at the moment. So we were discussing this guy while we're in Vegas together. So. He was up about 100 million discretionary trading perps, and now he's down, I think, 13 million at this point. What this guy's doing is he's taking massively leveraged bets, and he's doing it using discretion and emotion. So he's bringing in the human element, and as you can see here, he got lucky, and then he got liquidated. What's really fascinating to me is I actually compared it to Sir Isaac Newton's famous South Sea stock trade. You can actually see the chart looks incredibly similar, where you have someone makes a huge long position, they take profit, right? Then they re-enter the position because they get greedy, correct? And then they get liquidated and they go home broke. But yeah, what was really interesting to me, if you have a look at them side by side, it looks pretty identical, which is pretty amazing. And these two events are 300 years apart. And then let's compare that to Giovanni's chart here using the algo. So what we're trying to say here is, there's really only two ways to trade this market. You can play the cycle. This is what Giovanni's simple indicators show you, right? Where the bottom is, where the top is. It's a 4-year cycle, right? Even a little bit more in, you can look at, below the power law support, below the power law mean, above the power law mean. Maybe you could trade around that. Again, that's a little bit more discretionary, but really you could just do, 1 or 2 moves every 4 years. If you're going to trade on any kind of daily, weekly, monthly, you need an algorithm. We've just gone through the liquidity heat maps, how the market makers move. You've seen the timing of the positions. You cannot trade this market with discretion. You will get obliterated. And that's just what we saw with this James Wynn saga. What do you want your chart to look like? Do you want to make 2, 3, 4, 5% a month forever? Or do you want to take big casino-like swings, right, and get into some crazy euphoric position where you're up 1,000% and then you lose everything? Because at the end of the day, 100% of nothing is still nothing. So, this really is the tortoise and the hare. As good as the returns are that we can produce at Minotaur, it still is the hare. The tortoise. We still are the tortoise, right? We're not chasing these big swings. We're just chasing steady gains over time. As you can see, August 25, 25th of August till April the 12th. Think about the draw. We've had a 40% drawdown in here, right? We've just had a big pullback as well. Absolutely can't even see this on Giovanni's chart. So, to me, it's a no-brainer. You need to use Giovanni's indicators. You've got to play the cycles, and then you need a tool to be able to trade the dailies, the weeklies, and the monthlies. Otherwise, you don't have any hope.
Hey, just to update you, Costa, Wynn got liquidated again. I think
Yeah.
103.
Because he wasn't looking
Again,
because he wasn't
time.
looking at what the market makers were doing. He's making discretionary trades.
Yeah,
He's going in with his gut.
he was thinking. Yeah, he was going in with his gut. He wasn't looking at the liquidity, and he just became the liquidity because in that pool that we just looked at, he was in there with everybody else that messed up.
I've been tracking that 25x pool, and that's been just building up the last few days. That wasn't there a few days ago.
James Wynn was in there.
He was in
that pool.
And this is the thing, is that the market makers, that these are the Binances and the Bybits, and they're not going to lose. They're not going to give you a 40x leverage position to go into hundreds of $1 million of profit. They're not. They're going to take you out.
Not very long. Not for long. They don't get you.
So, the whole saying is you want to fight fire with fire. Use a tool that they're using. That's the only way you're going to beat them. You've got to play the game that they're playing. That's what we're here for, anyway.
Exactly.
I thought it was interesting how this is playing out. I want to make a video on it, actually, because I think it's been really interesting to watch.
Yeah, that's super cool. That analogy between two individuals over 300 years apart, both very smart guys and respected in their own rights, coming to the same conclusion, and they're not colluding together or anything, and it's the same. If that's not the predictor of human behavior, I don't know what to tell you.
Absolutely, because he could have, you got to remember, he made this is the thing, and this is like the Isaac Newton, is that he made a good decision. They made good money. They made good money. They could have walked away, but they didn't, right? And if Isaac Newton aped in and FOMO'd in, who are you to think that you're not going to, right?
No different. Yeah.
Anyway,
I mean, I think actually another way of looking at that is, you once in a while you get these crazy bets, right? And they go your way, but it's a bet. It remains a bet, so the probability of going up is
just Vegas. No different than Vegas.
It's like Vegas. It's like
you
Vegas.
Hit a big one in the casino once.
Sebastian told me this story, right? One of the people in our team where he put the first time he put any coin inside one of these machines, he made $1,000. And within a few days, he lost $1,000 and more. You can approach these things.
That's probably the worst thing that could ever happen to him.
And this guy was talking about Bitcoin trading like if it was exactly like Vegas. It's not, okay? If you go with that attitude, you're going to lose. Over time, you're going to lose. And it's not just him. Maybe one person can win, and for whatever reason, they decide to stop or whatever. But if you look at the aggregate of investors, it's like a house that has an incredible edge relatively to you. You're going to lose. And what we are trying to do is creating our own casino. We are going to be our own house. We're trying to flip because it's a completely different mentality. The casinos don't play on luck. They play on math. Everything they do, they know exactly the distribution of their machines. They calibrate the machines to have a little bit of an edge in their favor because too much edge is considered illegal. But they designed
Yeah.
these machines using math and using engineering to have an edge, right? A small little edge. And this is what we are trying to do. We are trying to create our own house, where
Correct.
we have that systematic edge.
And
And they are clever because we rather have that little edge that is continuous and is always there than huge, bets, huge leverage in their favor. Huge leverage eventually brings you to nothing, while a small little consistent edge makes that exponential curve go up. So this is what we are trying to do. This is our goal.
correct. You've got to play the game they're playing, and you've got to know at any given moment. Well, like for example, right? This discretionary trader, James, when he's going in, he's placing trades, he loses. Goes when we engineer our bots, we know exactly how our money will be deployed at any given moment, no matter what the market does. We know what's going to happen, when it's going to happen, how much money will get deployed, and how it's going to get executed, when it's going to take profit, and what the next move is going to be. And that's the difference between a bot and a system. And I think some people can't get their heads around what we do at Minotaur. A trading bot is something that maybe you download online and you put $5,000 on, you don't know what it's doing, it just spins its wheels, right? A trading system is when you actually look at your portfolio, right? How much are you going to allocate to this strategy? How much to this strategy? Are you going to be using Bitcoin as collateral? Are you going to be doing USDT? And then how do we then deploy that capital into the markets at any given time? That's a system. The bot then just executes the trades. So we do work very, very closely with all our clients in order to make sure that they fully understand how it all works and what it's going to look like over time. And that takes a lot more work than just downloading some bot that's just going to buy and sell over and over again. It's an important
Yeah.
distinction, I think.
And it
Exactly.
requires you also to be aware, right, of your environment, to see what the bot is doing, see what the market is doing. Nobody is going to be a passive user of this trading system because it's basically you are being assisted by the machine, but you are still being part, to the decision making. And the idea, because
Right.
we are pushing it over and over again, like Dario, that is my comic relief. I love Dario. um, some of you have met him, I made some of the videos, but we're going also to make a show in Italian called Lo Scienziato e il Degenerato. So the scientist and the degenerate. But, he is a little bit, it has some gambling tendency like that, limited because he's still, a Bitcoiner. But he would like to sometime, to push his luck. He bought Trump coin, and I was so almost shocked. I actually told him the day that I visit him, say this is when Trump coin came up, and they told him, okay, the moment Melania coin comes up, sell it. And it was a joke, but actually they created Melania coin, and Trump coin fell down, right? So, but there is and you can do it with a small amount of money and play around and have fun. But if you're thinking long term growth, you have to be systematic. You have to be patient. So, and this is what we are trying to build. Like he started to test the system, and he was making 2, 3, 4% a month. But most people will be super excited. But some people see that and say, "Hey, can we push it to 10%?" And I told him very specifically, if we can, that means risking more of your capital. Right? One of the references that we use is the power law support, and we want to make sure that our liquidation levels are below that. And to be more aggressive means to take some risk. And I told him explicitly, no, we are not going to do that. Because I'd rather build these small but consistent gains over time that are not that small, right? By if you compound a 5% amount, we're talking about 80%. That beats Bitcoin itself, right? Because a Bitcoin right now is making about 45% according to the power law. and these gains are on top of your power law. So in essence, you're more than doubling Bitcoin performance with this method. So, and for some people, 5% seems unrealistic. Some
Absolutely.
people actually are right in pushing back and say, no, 5% is actually something that I don't even want to believe. But the best way to believe it, you should not believe anything. You should verify. So the people that use the system can verify that
Yeah.
it's real. Anyway, guys, do you have anything else to add to this? I think it was a pretty good
Yeah.
summary of the market and where we are and so on. Okay,
Yeah. Yeah. That was great.
good.
Um,
All right, so we will be here next week again, and next week I will show you this log periodic power law and see how it actually matches with everything else, because it actually makes very precise prediction about the next couple of oscillation there are. Because basically what we should observe if we are in a real bubble is that this oscillation became faster and faster and faster, almost they go to a frenzy as we arrive to the peak. But yeah, it will be interesting to track it and see how it aligns with everything else.
all right.
Absolutely.
There weren't many
Okay,
questions
and
tonight.
we can look at some questions. I think
Uh,
this is the only question that
it's a good
maybe we can
question. I'm still trying to
answer.
work. I
Why
can't
very?
get my head around this one.
Why is there so much? Why is there so much hate against the power law people with some YouTubers like British Oil? Well, first of all, I actually British Oil and I we made up. We are in better terms recently. We had some nice exchange. He even say something in Italian like um, we were against each other in the past. We should work together in the future, something like that. But I think what happens, there is a spectrum, right? There are people that have agendas of their own, and to them, Bitcoin being uncertain, like they will still agree that Bitcoin overall goes up, right? But saying, oh, there is actually a very precise equation, there is a mathematical formula that you can write that predicts Bitcoin. Take it, because they didn't come up with that stuff, takes a little bit of their relevance, right? If I am an influencer and I'm going to tell you, oh, because these guys came together and Powell raised the rates and blah, 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 they will come up with a story, right? If you notice, most of these, the majority of influencers make up a story. They're trying to describe some conditions in the market and then derives some prediction, and they can be wrong or right, but it looks like a little nice marketable story, right? But they never say why that particular event should give us, 5% growth or 10% growth, or maybe why we go down. It's mostly after the fact or very, very vague. So now imagine arrive somebody and say, no, 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 we actually have a formula and it's more the other way around that, yeah, sure, the price can be pushed down or up, but it's just temporary. And then the price wants to go back to this fundamental pattern, right? Or when you have somebody like Marcos that tells you, oh, let's look at the liquidity, right? We never associate it. You don't ever see in this show us talking about all these external events. Maybe global liquidity, right? It's all data driven. We are all data driven. Show we show you the data. We show you the local liquidity data. We show the global liquidity data. We show you what the price or hash rate is doing. It's all data, and many people don't have that background. All what they have is some story, right? They can also maybe make it coherent, where you listen to them and says, "Oh, this is a great story. It seems to make sense." But people have said all kind of things about ETFs. ETFs will break the power law. They didn't. We actually are following the power law even stronger than before, since we have the ETFs. They will come up with all sorts of stories that at the moment seems reasonable, but they don't tell us much. So I think about a lot of the resistance towards the power law comes from that. That many people they don't have a tool, they don't understand the math, and they lose some level of influence with somebody coming and say, "Look, Bitcoin actually is predictable. It follows very precise patterns. We can try to understand them, right?" And also, he was against me. Most of our friction came from him saying that you should hodl us at any cost, because actually I do want to make a very important point here, right? So there are people like British hodlers and other influencers that made this philosophy of hodling into a religion. And I think that it's an important thing for a Bitcoiner to be long-term hodlers. I think all of us are, but there is a small group of people, like the people that we are watching in this show, that think, what about, we still keep most of our coins offline, you know we don't trade with them, we want to continue to grow them, but then we think, look, I'm not going to retire with zero point 0.1 Bitcoin. I could be one of these guys that doesn't care, because I lost them all in a botax, but at a certain point I had more than zero point 0.1 Bitcoins, right? But there are some people, again, for gaining influence, I think, that make these claims, right? They want to convince the zero point 0.1 hodler that they can retire with zero point 0.1 Bitcoin. We are data driven. I don't see how you can do that, because even if Bitcoin goes, I don't know, to $1 million, $10 million, all right, zero point 0.1 Bitcoin maybe is $1 million, but this is 20 years from now, right? How much can you really retire with $1 million in 20 years from now? I don't know, because that 1 million is not going to be the same million than now. And even $1 million, unless you go to a third world country, is not enough to retire. So what we are trying to do is, okay, maybe you can put into action that zero point 0.1 Bitcoin. I think zero point 0.1 Bitcoin is still too little. Maybe you should try to push it to 1 Bitcoin. But if you have 1 Bitcoin and then you use tools like ours, over time, that 1 Bitcoin is going to be 2 Bitcoins. In fact, actually, this is one of the things I want to do for the next show. I want to show you what is possible, right? You start with 1 Bitcoin, or maybe a little bit more invested in this system. That means that probably, you have more than 1 Bitcoin, because you don't want to put all the Bitcoin that you have in risk, right? This is something that maybe should be, I don't know, 5-10% of your holdings, no much more. I don't know what you guys suggest, but this is how I see it. Um, and then you use a system like ours that makes your Bitcoin grow. That is the goal. And I know that people like British authors will start to attack this makes your Bitcoin grow, right? Because they think the only way is to do DCA. But they talk about other things. They talk about MicroStrategy. They talk about other tools on the side. So that is a form of trading, right? If you buy MicroStrategy, you're buying some leverage, and now you're not holding Bitcoin anymore. So
Right.
this method allow you to hold Bitcoin, because you're not selling, buying Bitcoin, you're using futures, right? Maybe we need to explain it every single show. This system uses futures. So the beauty of it is you still hold your Bitcoin, you're not selling it, but now you're putting them into action without buying external to things like MicroStrategy or MSTY. This is directly Bitcoin, and you're using it as a collateral. So
But
you will
it's
never get gains if you're not taking some risk.
it's funny.
But even
Uh,
the ratio, right, between risk and the rewards is so balanced. In fact, I will say we are making sure that the risk is minimal. But because Bitcoin is such an amazing tool with a relatively in your favor balance between risk and reward, it can, and patience, because you're not going to double overnight your Bitcoin, but you're going to over. It's not going to take 1 year, 2 years maybe, but you're going to increase your amount of Bitcoins. if you are consistent, So these
Yep.
are these I think this is why some of these influencers don't like it, because they don't have anything like this. They don't. And
But
now there are people that coming. It seems too good to be true. And
it's
my suggestion to other influencers, other people that are in the space, before dismissing something they don't understanding, maybe you should understand it better, right? Maybe you should test it. You should never, like, we know that the motto for a Bitcoiner is, do not trust, verify. So verify, try to understand, trying to study, try to learn, and then see if this works for you. It's the only way.
the it's funny, Giovanni, how when it comes to money, we let our thinking get flawed, right? So if you just look at a very basic thing that we can understand, like farming, right? What farmer do you know? We all eat fruits and vegetables and things that come from the earth. What farmer do you know never plants his seeds? He only holds on to them. How would that make sense, right? You have to take a portion of your harvest and plant for more harvest, right? If you just hold on to the harvest, what happens to the harvest if you just hold on to it? It spoils, it
Yeah.
diminishes, it goes to waste. You have the universe that we live in, you have to put some of it to work. You have to plant some of your seeds. You just can't hold. You have to release to gain. And when we come into this, some reason when we get attached to money, we forget those fundamentals. We just lose our mind, and it's at our own detriment, that we do that. Yeah.
Absolutely.
Exactly. Yeah. So,
Awesome.
and you don't have to abide to this philosophy of ours, right? It's like I say, we are 90% hodler, and just a little bit we think,
And a little bit.
okay, why don't we use the two aspects of Bitcoin, that is the long-term growth
Yep.
that we know where it's
Yep.
going, and then also the fact that Bitcoin is alive, right? It has all this
Use a little.
beautiful volatility, and you became friend with the volatility instead of being an enemy. Right now, the price went to 101. I'm actually happy about that, because it's an opportunity to buy Bitcoin cheap. And people say buy the dip. Many of us will not be able to be there in front of a computer and see when there is a dip. Is that the best dip? Doing it with a code is amazing. You allow the code to do that for you. And
But but by the dip, how much? How much do I buy?
How often? When?
When do I sell
yeah,
it? How long do I hold it? It's but by the dip is like the most simplific. It's like the biggest simplification of a really complex
yeah,
decision. That so these things need to be considered mathematically and scientifically. That's what deploying a
correct.
bot is engineering something with math. That's exactly what we're doing. We're
Yeah,
using math to engineer a trading system, right? Um, there's nothing non-mathematical about it. It's the most mathematical thing that you can do. Um, that's what we're doing here. We're in the business of understanding the math and the science, and deploying our capital into a live market. Based on the knowledge and information that we're getting.
hmm, yep. Anyway,
All
yeah.
right.
So, and if you're interested, guys, in the system, we have a link that you can use to listen to our webinars. And you can also contact me. I can give you all the information. You can ask any question. One of the good things, that um, is also, I think, a very powerful feature of our team, is that we are super open. All of us use the system. We discuss it all the time in the shows, but also in our Discord groups and so on. So you have full access. A lot of these other things you find online, there are closed boxes. People, you don't even know who created them, but
Yes.
we put a face, a name behind these products, and so you can always contact me, Costa. We are more than available to discuss with you the details, and give you all the information. Like the same process that you went through Bitcoin, understanding Bitcoin, it should be applied to anything, uh,
Yes.
and so including our system. Anyway,
Excellent.
guys, I think we can end here, and
We have
we will
to.
see each other next week.
No worries.
Have
See you
a
guys. See
nice
you next
weekend.
week.
Great.
Thank you to
See
listen
you.
to us.